Hello, Paul here. Today we're going to be looking at a strategy for trading gold. Now I have a couple strategies on the channel for trading gold. I don't talk about it a lot because gold is a very volatile asset. So whatever your strategy that you use for it, it needs to be a pretty good. A lot of people will use trend lines and different other strategies. I'm going to show you a custom strategy. This requires two indicators that I've talked about in previous videos. This goes over the 9095 and the linear regression candles. So you use both of these, and you focus on longer time frames. It can lead to some pretty good results. So we're going to focus on gold on mainly the hour chart, but we'll get a good idea where the direction is. We'll look at the day. We'll go to the hour. I don't recommend using this strategy for shorter time frames. But first, we're going to identify the direction by looking at the day, and then we'll apply the strategy and see how it works to find some pretty good trades. Okay, so for this strategy to work, you need to apply two indicators. The first one's going to be the 9095. You can get there by going to your settings and going to CM, EMA trend bars. You're going to hit that twice, and you're going to put in 9095. Now, I use a paid indicator. It puts both of them in one indicator, saves space. But for all you guys, if you want to use this, you have to put in this. It works the same way, so you just have to do CM, EMA trend bars. And that basically does is it pretty much outlines a major level of support, which is right here. So usually, it can usually bounce from around that area unless it turns into a downtrend. But that's basically what it's used for. It's used to see a major level of support, which you can see right here already. Major level of support. So doing this alone, you can increase your chances because most likely it can bounce, and you can always just take your little cursor there at the end of that 9095, and you can see about what level it might bounce from. So you could pretty much look at this and say, okay, it could come down. It could come down all the way to here, and it probably can bounce. So around $3,191, you could put in a buy order if you want. If the candles get around that number, if you want to take that risk, but that's not what the strategy is for. But mainly, just it could be used as a level of support. You can always see where it could potentially bounce from. So the second indicator here that we're going to be putting in is the linear regression candles. So what you do here, you want to go to your linear regression. It's by UGURVU here. And once you have that set, what I do is I make the plot line a little bit more thick, and you can actually bring out the opacity to these as well. So what I do is I'll just set it as reset the settings. I'll put my thickness a little higher, and then I like changing the color to a little bit brighter. A bright green and a bright red. So you're left with this. So for the purposes, I like doing it. I like doing it without a body back, actually. So I actually remove the body. It becomes a little easier to see. It becomes a little easier to see what the candle's actually doing when you remove the body from it. But anyway, that's how I set it up. So basically what you want to do is you want to look at gold, and you want to enter whenever. Well, there's two times you want to enter. You want to enter when the plot line is crossing the 9095, and you do that on a higher time frame. But you do it. It's not. It doesn't work as well on a shorter time frame, so we're not going to mess with the shorter time frame. But basically, if you look at right here, when the plot line last crossed was right here. And you can also use your 90-95 to see that. But if I draw a line right here when it first crossed, and, you know, I could have just rode this entire thing out and be in profit. So what you basically want to do is you follow that plot line from the linear regression candles, and you just, every time it crosses through with the 90-95, it's a pretty good entry point. Now this only really works well on a longer time frame, but it works really well. So real quickly, we're going to analyze it on the day here, because we will first look at this on the day and then how to scalp it on the day, and then we'll go to the hour. So this was the original cross point. This was when it made that move. So from this point, it's bullish. So what if you miss the cross? So if you're looking at this on the day, the next time to actually get in is right here, where you see the candle going through the linear line. It has to be a full body candle, and it has to go through the linear line to get a pretty good result. So there's plenty of times to have gotten into this on the day chart just to look at it. Now these do take a while to find, but when you do find these, and when you do it on the day, it leads to some pretty good results. We can look at here. So it crosses up right here. So this would be profit. So you want to get in when it's crossing through the plot line of the linear regression candle. The next entry point is right here. We see it passing through the linear line again. So you could have come in right here, and that would have been a good trade. Now there are a couple times where it might not, not every trade strategy is good, but for the most part, you see it cross again right here. This would have been a little profit. And then you see it crossing again here, and this would have been a massive profit all the way up. But for this to work, all these moments where it's crossing up through that plot line are trades, basically. And all you have to really do is look at this on the day chart and see every time you have identified that it's bullish right here. So you have to wait for it to come down and then have it cross back up through that plot line. So every one of these are trades, basically. And you're looking at this on the longer time frame. So there's going to be a couple days where you have to wait it out. But that's looking at this on the day. Real quickly, so we're going to be looking now at this on the hour. So we know by looking at the day that the overall direction is up. So up is the path that we're going to be focused on. So we're going to go to the hour. The hour is, if you want to do this more intraday, so what you basically want to look for is the same thing. You want to see that plot line cross through and enter your trades. And you want to enter your trades every time you see it crossing. So it's not quite crossing there. It did cross here. So it could have crossed right here. But what we want to look for is the candles passing through the plot line. So you would have a trade right here. That would have been a winner. Passes through again right here. This would have been a winner. And you just wait for it to cross. Let's go back to the last time. It crossed right here. So you could have entered here and rode this entire thing out. That would have been a winner. And this would have been a winner. A little one. But anyway, you guys get the general idea. You need to use these two, and then you need to look at your plot line, and it has to... The first entry is it has to cross the 90-95, and then if you miss that, you have to wait for it to pull back a little bit. If you're dealing with an uptrend, it has to pull back, and it has to pass back up through that that plot line. If you're dealing with a downtrend, like right here, downtrend, you have to wait. You know, if this is official downtrend, like if you look on the day chart and it's a downtrend, first you got to wait for it to cross down on the 90.95, and then you got to wait for it to pull back up a little bit, and then you enter when it comes down. You have to do the opposite, but you have to identify what the actual direction is. So I wouldn't use this strategy for smaller time frames. This strategy is meant for longer time frames. It works the best. First, you want to go to your day chart. You want to identify what the overall direction is, and then you want to focus on that direction. Then you want to go down to your hour for more frequent trades. You can look at this on the day, but you're going to have to wait longer. Once you have identified if the plot line has not crossed, the next point of trades is when the candle passes through the plot line in the direction that it's supposed to be going. You do this on the day, and if you do this on the smallest I would go would be the hour or the 30-minute. I wouldn't do anything less than that for this strategy because it's meant to find those longer trades. It doesn't work well on smaller time frames because you'll find that it keeps crossing, and you'll enter a lot of sideways moments. So it works best for longer time frames. So anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.